Hello everyone and welcome to today's video. Today we'll be discussing about audit of expenses. And if you're someone who are new to the channel, then please do watch a playlist created for you guys, basics of auditing. In the sequence in which it will help you to start with audit. So moving on, we'll be discussing the topic audit of expenses. So I will again start from the beginning where we always start. So you to get an essence of what audit is. So when you go to a company, by the time if you have watched my other videos, you will have got an idea that what happens in audit. But in case you have not got an idea, then we'll discuss it from the very scratch. So this is the balance sheet of HUL, suppose. So you go to a company and they give you the financial statements of the company. So first they give you the balance sheet, and then they give you the and attached is the profit and loss as well. Yes, balance sheet, and here is the profit and loss. So now you have been assigned with the area of audit of expenses. Now how do you start the audit? Your starting of audit begins from here. The client has provided you the financials, and now you have to check the expenses portions which is given in the financial statements. So like if we see here, the major expenses which we are talking about right now, because purchases and all are dealt separately and employee benefit expenses are dealt separately. So we will be talking today mostly about the other expenses, which is shown in note number 33. So first we'll be moving to note number 33. So let's go to note number 33. Yeah, other current assets. Note 33, yes. So this is note 33, and here are few expenses which have been grouped. Like there are advertisement and promotions, carriage, freight, royalty, processing charge, power charges, traveling expenses, and other miscellaneous expenses. Okay, so this is the area which you have to check. So how do you begin the audit? So if you know, till now, the client gave you the financials, they'll also give you the notes. Now first thing what you'll do, first thing you will go and check whether these figures are coming from where. These coming figures are coming from the books of accounts of the company. So if it is coming from the books of accounts of the company, let me first check that whether the figures are matching with the books of accounts. And how do we do that? We do that by checking whether the figures, the same figures are being shown in the trial balance of the company. So I have just created a trial balance. The figures do not match with it, but I just wanted to give you an idea that what is happening step by step. So first the client gave you the financials, you saw the other expenses notes, and then you went to the trial balance and will check that each and every figures which are disclosed here are matching with the trial balance or not. So suppose this is the trial balance of the company, and right now just imagine that whatever figures which have been grouped, there will be all figures will if you go to a if you see the trial, you'll see that there are a lot of expenses coming in the trial balance. However, in the notes to accounts, what you see, there will be a lot of expenses which have been grouped. So they will give your bifurcation. Suppose like here it is written power, fuel, light, and water. So if you check the trial balance of the organization, it might happen that there will be a power expense separate GL, there will be a water expense separate GL, there will be a rent fuel expense separate GL. All these figures get clubbed, and right now what you're seeing is 277 lakhs is 277 lakhs you will be seeing in the uh, face of the notes, right? So I hope this is clear, but right now we will be going ledger by ledger, uh, uh, each ledger separately. So we went to the trial, we saw that this figure is matching with the trial balance. This is the first step which you do. So if the figures are matching, your one part of checking is done. Now you have to obtain substantive audit. You have to perform substantive audit procedures, that how do you validate whether the amount which is coming in the trial balance is correct or not. So today's agenda is on that how do you apply their approach and check the expenses, right? So starting with the first thing, see, trial balance do not have a previous year figure. Okay, so first thing, if you're doing expenses, there are two approaches of selecting which ledgers to be selected and which ledgers not to be selected. Because see, the organization of the client is huge. There will be lot of multiple ledgers, and here is where materiality concept comes. So you define materiality, you define a specific threshold amount and a materiality amount. The if the general ledger balances crosses those amount, those ledgers you check in detail. If the if the amount does not, if the ledger balances does not cross that amount, you do not uh, you do not check the specific ledger, because it is not possible. There will be almost 200 or 300 ledgers of expenses. It is not possible to because the limitations of audit, it is not possible that you will be able to check all the 300 ledgers, right? So so how do you do the sampling? The first concept is materiality. Materiality helps in identifying which are the which are the ledger balances which have a significant uh, risks and which can affect the users of the financial statement decision. And the second thing what you can approach is variance analysis. If you're comparing it with the previous year periods, if there is a huge difference in the uh, balances which are coming right now and the balances which were previous year, then that can also be a sampling technique to identify these are the ledgers which will be checking in detail. Now starting with the first ledger, so I have done, so you got an idea how I am proceeding. So first ledger, if you see the first ledger, the first ledger is of rent. 1,44,000 is the this year balance, and last year it was 1,20,000. So there is a variance of 20%. Now I can select, I can check also this ledger depends on the materiality and depends on the what is the variance threshold which I've kept, or I cannot check also. It is totally our judgment. But right now I have selected few ledgers because the thought process and how we will be checking all this ledger will be different in every case. So that's why I wanted to check. So just imagine that we are checking this ledger. So we have to check the ledger of rent and the expenses 1,45,000. Before I begin, I hope you will have read, everyone in the enter, there is a chapter of vouching and vouching, where which talks about that in a in an expense what are the things which we check. So I will just brief you about that, that they generally talk about that whether the bill, the expense bill is in the name of the company, whether the period is stated properly, whether there are appropriate there are proper approvals for the bill, and whether proper TDS deductions and all ITC claimed has been taken or not. These are the general points which you check in a bill. Like if you are asking for the rent bill, these are the few general things which you'll be checking. I am going to add few further points which are not generally written in the books, and this is how we complete the audit. So suppose I have been allotted the expense account, and right now I will be checking the rent GL. The first thing what I will do is that first I will check it whether the balance is matching with the ledger or not. And I've always told the concept that see, ledgers and trial balance figures, ledger closing balances and trial closing balances figure will generally match on until and unless there is a timing difference. The trial balance has been extracted at a later date, and you and like 10 days before or 2 days before, and you are doing the audit right now. So it is very important that when you are doing the audit, you trace it with the ledger. So first thing, we trace it with the ledger. So this is a, I've just tried to create a ledger, and this is the ledger which is showing 1,44,000 balance. So what you as an auditor, the first check what did you perform? That you first traced it with the ledger and checked whether the ledger balances are matching or not. The second thing, you will be checking if there is a rent expense being made, there should be an agreement for the same. So you will be asking from the client the agreement. It might be also be the case that these agreements are already there in your previous year files, and you may refer that. So you will ask for the agreement. The third thing what you will do, you will ask for a rent invoice, that what is the invoice, show me the invoice, and you'll see like I showed, it is in the name of the company, the period is correct and all. Now when you have checked all these documents, it is it is not required, it is totally based on your judgment that you have to check all the 12 months documents. It might not be required, right? Because all the invoices are comparatively same. You're saying that every time the uh, ITC, proper ITCs, if it is eligible to be able, is been taken by the company, TDS deductions are being done properly. So it is not required to check each and every bill. What you can do is that you can prepare a summary. So what are your concerns? Your concern was that whether proper expenditure has been incurred, means it was a genuine expenditure. So you saw a rent agreement, you might have physically seen also the premises which has been taken on rent. You saw that there are proper rent invoices, proper TDS deductions is being done. And the fourth or fifth check what you can check is that you can check whether there are every means there is no month that, which has been left out. So like in my case, if you see, there are total 12 invoices which have been posted. If you see here, it is the count is 12. So this is also one more check which you need to check, that only 12 invoices have been posted. It should not be 11, it should not be 13 only. And it can be only when the agreement says that only in the case of agreement is has expired and the agreement has not got renewed, then there can be a shortening of period, but in no case it can be 13. So these are the few checks which you can check, and then you can prepare a summary like this. Like, see, this was the rent, this was the number of months, and it should come. Rent was the rent was specific 12,000 rupees. It was for 12 months, and that's why the general ledger balance is coming 1,44,000. So in one shot, the you have got full control in the ledger balance which is showing. And the party name, you can write the, like, this is a hello world party from which they have taken rent. You can write down the party name as well. So I hope you got an idea that how did you substantiate or how did you verify that whether the rent expense which is showing in the general ledger balance or rent expense which is coming in the trial balance as an auditor, what are the documents, what is the thought process which ran into your mind, and how did you substantiate all those with the documents which you have collected, and how did you make a summary. And then you can write about some checking notes as well, that you check the rent agreement, you check the invoices, you check the TDS reductions, you check the ITC availability also. So, and this is how you took full control in these expenses. So I hope you got an idea that how do you check an expense rent. So similarly, if there are any other expenses similar to which has a fixed payment every month or every quarterly, you can those GLs you can just summarize it like that. You can see that if it is a quarter payment, there should be no more than 4 quarter payments being posted. And if it is a monthly payment, there should be not more than 12 months, and it should not be less than 12 months also. And if there is in any case it should be you should have a valid reason for that. So, and that is how you take a control of the relevant expense. Moving on, we'll be discussing right now that, and that is what happened in this case. The last year the rent was 1,20,000, so maybe it was 10,000 rupees per month, and right now, due to the escalation every year as per the agreement, there was a 20% rent hike, and that's why it came to 1,45,000. So you have the reason of this variance as well. Second, purchase of power. So in purchase of power also, there is a variation of 33% in the expense, and 14 it's almost 14 crore rupees. Now if you're checking purchase of power, so there must be a state electricity board or someone or any electricity board from which the company is taking electricity up. So here also what you'll do, first you'll check with the ledger that whether the amount is matching or not, Second, what you will do, you'll see that not more than 12 months bills has been posted in the purchase of power ledger. And if it is 11 also, then also it is a questionable thing, because they have left out 1 month, which is showing that the expenses have been reduced. We are not showing the proper expenses, and if it is showing more, then the expenses have been increased, so that should also not happen. So purchase of power, you are checking, you check the ledger balances, you checked whether 12 months expenses posted. Now here is a question that you cannot you need, if you are doing some internal audit, in case of internal audit, you and you will again check the bills, you will see that whether like in or I think so power 194Q or some section is applicable, whether the proper deductions are being made in those sections or not. Now if you will like there is a variance of 33%. In order to identify why this variance is happening of 33%, why the power figure is increased compared to last year, there are a lot of reasons it can happen. And if you're doing an internal audit, you can do an in-depth analysis of that. One reason can be maybe the per unit rate has increased. Suppose previously it was charging 10 rupees per unit of kilowatt hour, or per unit, and right now it is charging maybe 12 rupees. That can be a reason. Secondly, there can also be a reason because of on 31st March 2021, maybe the production was, whatever the company is producing was lower compared to right now. So that's why, because of the lower production, the electricity rate was less, uh, and now it is high. So I'm just showing you the ledger power. And so this will be a similar ledger like this, and you will see all these things, and then you can do an in-depth analysis. Like what I'm talking about right now is that suppose in the month of April, the company produced 100 kgs, 100 kgs, suppose, just a number, and the power consumption was 12,000 kilowatt hour, suppose. So what is the per unit per kg usage of electricity? Sorry, what is that? Acha, sorry, just I've just, yeah, it is 120 kilowatt hour per kg electricity is used. So like this, you can plot down all the numbers April, May, June, and see whether the per unit kilowatt hour is increasing, per kg of kilowatt hour per kg of production is increasing or not. If in any case it has gone very drastically, you can show the management that, see what is happening, because your average trend is showing that, like suppose in the month of Feb also, May also, it is around 14,000, suppose, and what is happening, 116. So if your average kilowatt hour per unit or per kg of production is 116, and in one certain case it is coming to 130 or 140, you can ask the management to get deep into that, what is happening, see why the power bill is increasing, and that is how you give a value addition point to the management. Also remember, in a commercial industry there are a lot of vital factors to be kept in mind. Like there is power unit consumption rate is not fixed for 24 hours. It might happen, they do have a category of peak hours and non-peak hours and normal hours. Okay, so like in peak hours the rate may be 20 rupees per unit, and in the normal hours it is 10 rupees, and in the downtime it is 8 units. So that can also be a reason that why the power rate is increasing. So these are the kind of analysis, apart from the checking the bills which you do normally and seeing it is in the proper period, and seeing whether the all the 12 months bills are posted or not. An analysis of why the power rate is increasing, fluctuating, what how do you contribute. Also you can do some value addition analysis. If there are sometimes what happens that company do take a minimum power guarantee, that, so I will be requiring 10,000 kilowatt hour for sure every month. And if suppose what happens that the company from the past 7-8 months, due to some reason, is only utilizing its power consumption is going only till 8,000 or 9,000 kilowatt hours. So you, as an auditor, what you can, again in case of internal audit, you can give a value addition point to the management that, see, you are not taking the minimum demand which you are asking for, and the electricity bill is charging you at least minimum 12,000 hours, because that is you have committed the electricity company that you will be using that. So these are the value addition points where you can work upon and give to the management some good pointers. I hope you have got an idea, and I hope you will be able to do some good analysis in the power ledger as well. Let me know in the comment section if you face any issue. uh, Next, moving on. So I you got a flavor that how you'll be checking rent, you got a flavor that how you'll be checking a power. Similarly, legal expenses always in legal expenses, it is recommended that you do not go with the concept of materiality. They might ask you in the interview questions also that whether the concept of materiality will be materiality threshold limit, like I told in the beginning of the video, that whether you will be applying it in legal expenses or not. So the answer is no, because what happens is that if you're checking the legal expenses ledger, you will be getting to understand that what is the litigation matter, or what are the things going on with the company due to which they are incurring such legal expenses. And it might have a direct relation with the contingent liability which the company or has stated, and there might be situations which can lead to provision also. So if the amount is even 10,000 rupees in the ledger, do check whether what has happened in that case, and why the company is incurring those expenses, uh, so that such high material contingent liability or provisions which needs to be taken in the books does not get ignored. So the similar thing only you will apply. You will see the ledger, you will see all the invoices, you will try to understand what is the cases for which they are pending paying the amount, and whether it relates to the proper period or not, and that is how you uh, check. Moving on, in professional fees also, similarly check from whom they are taking professional fees, what is the nature, they are deducting TDS or not in TDS or not. Check the invoices in most of the cases. If there is a periodic professional fees payment, suppose professional fees payment, suppose there is a person whom they have taken consultancy and they are paying every month 1 lakh rupees to him, just summarize the ledger like I have done in the case of rent, that this is the party, and 1 lakh rupees per month for 12 months has been paid, 12 lakh rupees has been paid to those party, and then there are other small payments which have been made to other parties, and then write others 3 lakh rupees. So this gives you a summary screenshot. So if you are maintaining your working documents, and there will be a summarized explanation also, that what is this expense relates to, who are the parties involved, and you can again keep the few invoices as a copy. Like in the case of periodic payments, you can keep 1 or 2 sample invoices in the copy, and similarly you can keep some you can keep the agreement as well. You do not need to check all the 12-month invoices. I've always told you, it all depends on your judgment, that whether things what you are seeing is correct or not. It And it is a fixed payment, like uh, and there is no chances of manipulation. In that cases, in case you are feeling comfortable, then check 2 or 3 invoices, because there is a proper agreement, and that is how it is paying. So if you check 12 invoices and if you check 3 invoices, there is nothing going to change. What matters is that whether every logic, whether they're paying proper whether they're taking proper input tax rate or not, paying taxes at the proper rate, making deductions at the proper rate. These are the things which matters. So if it is happening in the one case, it is expected that it will happen again. You have to check whether what is the control which the company has kept in making sure that TDS will be properly deducted. If you see that it is a manual control, and every time the figure, sometimes the professional tax, the same party professional tax reduction is being made in 194C, and sometimes it is made in 194J, 192J in professional fees or contractor, then it will be required for you to check all the 12 months data, because there is a huge manual intervention, and there are chances of inaccuracy, right? So this is how you moving further. In case of repairs to building, like see, last year the repairs was only 12 lakh rupees, and right now it has increased to 45 lakh rupees. So what has happened? So these are the ledgers which needs to be checked in detail. So again, if there is a periodic payment which is happening, try to summarize that this is the party which is getting almost every month payment. Again, see few expenses, see if you see the what is the big nature, big ticket item, whether it is not in the nature of capital item, it is revenue only though, because last year the expense was only 12 lakh rupees. What is happening, which has what the company's expense doing expense, which 45 lakh rupees has incurred. So apart from only checking the mills and saying that whether the expenses are getting booked in the proper period, this is also important that you check whether it is in the nature of capital or revenue nature. So that is also an important thing which you as an auditor should check. So I hope you got an idea that in, so see, every GL what I tried to take have some element of differentiation. Like in repairs to building, you had a element of differentiation, that whether I have to check in this case capital revenue, in this case professional fees, I need to see if there is the proper TDS deduction, whether it is instead of professional fees it is getting deducted in contractor, TDS on contractors. In legal expenses, it has a direct relation with the contingent liability. Purchase of power, you can do an analysis of the per unit consumption, what is the minimum demand they have taken. And similarly, rent, that all 12 months electricity is getting paid, booked, same with power as well. So everything. But in legal fees, you can there, if there is no fixed payment, you cannot do that all 12 months electricity, 12 months legal fees is being paid. Similarly, in professional fees also, if in case if there is no fixed agreement, you cannot say that the expense ledger is complete, means is complete. But in few GLs you can check, so in which GLs you can check and which GLs you cannot, and where you will apply the concept of revenue and capital and all, you got an idea. Moving further, insurance expense. So see, if you see last year the expense was 1,10,000, and right now the expense has increased to 20 lakh rupees. So what is the nature of this increase? And also, so in the case of, if you remember, if you have done any insurance, always you see insurance is in the nature of, starts from the middle of the year and ends to another middle of the year. So there is a huge chance of this, a few amount of expense getting transferred to prepaid. So that is also an important checkpoint to check in insurance expense, apart from the invoices and all which you are checking, that whether the amount which is showing in this year's GL is with, is relates to the period which it pertains to. If it is pertaining to other period, then the amount should be transferred to prepaid. And you can also check that what is the reason of the increase of rupees 20 lakh rupees from the 1 lakh rupees, what is the new item which the company has insured, whether, and if you're doing internal audit, you can do some in-depth analysis that what was the rationale behind insuring this item, a new item, or an item, new item, or what are the benefits which the company is getting of paying such high insurance charges. Similarly, moving further, in traveling expenses, again 50 lakh rupees and last year. So what was the reason of such high increase in traveling expenses? What are the nature of expenses coming in this traveling expenses, whether it relates to employee traveling and reimbursement of the same, if it is if it does relate to employee traveling and reimbursement of the same, whether it is as per the company policy or not. Suppose the employees eligible for a, as per the hierarchy of the employees, it is eligible for a train, and the company, but what he is charging is, what he's booking is a flight, and he is getting reimbursed from the company. Such things are not happening. So everything should be as per the company policy. Cap travels and all should be properly authorized, should be as per the company policy. So these are the, if there is any TADA, dearness allowance which is given, if it is outside the company, so it is at per the limit set by the company. So everything, this kind of things which you should keep in mind while you are vouching such expenses. So, and similarly, if there is a, like suppose there is a vehicle charges as well. So vehicle charges also, two things can happen. Like the company has few fixed vehicle expenses, like fixed in the sense, like suppose company has a lot of bus for their employees, which charges a uh, fixed charge every month. So in this vehicle charges expenses, you see that all the 12 months proper posting has been done for the fixed charges of the bus. And then there will be a running charges, that how much kilometer the bus uh, ran, and what is the per kilometer rate. So that also you can check. And then you try to do a summarized thing, that this is the party, like Mr. A is the party who is giving supplying bus, and this is the per month fixed charges. Suppose here the figure is coming to 15 lakh rupees or 20 lakhs, suppose 20 lakhs. Okay, 20 lakh rupees, and 1 lakh per month is the payment which is made to Mr. A. Then there is other kind of card charges. Suppose the company has acquired few few cards for traveling of other senior members. Then you write which has been given to Mr. B, and that also has a fixed charges. So it is suppose 50,000 rupees to 12 lakh rupees. This 50 so you, what you'll do in the ledger is like Mr. A 12 months 1 lakh rupees, so it will be 12 lakh rupees. And then Mr. B sorry mm, then Mr. B, the 12 months, the rate is 0.5 rupees. I'm just writing and then it will be 6 lakh rupees. So here comes to 6 lakh, and then you can like that other running charges of the bus and yeah, and which is coming to suppose 7 lakh rupees. I'm just trying to do this amount as 25 lakh rupees. So these are the thought process and the way how you do the checking of expenses. And once you have checked all these expenses, you have got a control of all the expenses, and then you can say that the figures which are coming in the financial statements gives a true and fair view. So I hope you got an idea that how the audit of expenses is carried out. And of course do try, uh, and let me know if you face any issue. You can always mail me at auditpractically@gmail.com. And thanks for watching the video. Please do like, share, subscribe the channel in, and do support us. And you are always welcome to share your learnings to our channel. In case you feel like there is something you want to share your learnings, please come ahead. And thank you. Mm, and we'll make future videos very soon. Do let us know in the comment section also that what are the topics which you're interested in knowing, and we'll prepare on such topics as well. Thank you so much. Bye bye. Thank you.